What's your current assessment of the global economy and financial markets?
The US economy continues to slow. And whether it's a recession or not, technically speaking, I think the trajectory of activity should be more of the focus. And it's really more of a game of semantics of whether it's a recession or not. And if we just looked at the both ISM numbers last week below 50, that should tell you the direction of the US economy. Then you throw in, of course, the housing industry, the auto industry. I mean, those are big chunks of overall activity. Europe is, whether it's in a recession or not, it's certainly dancing around one. I think the interesting part of the economy right now globally is what's going on with China. Not yet, because they're still, of course, dealing with COVID going through the population like wildfire, but what's to come in the next couple of months. And that is a grand reopening after 3 years of shutdowns that I think is going to be a major influence on those parts of the world, particularly Asia and parts of Europe that do a lot of business with China, is going to be a game-changing factor that I think people are going to have to enter into their calculations.
Is the opening of China potentially large enough to net overcome the slowing of the global economy in the other places you mentioned?
It's a good question when you look at it in the aggregate. I'm more confident to say that anybody who does business with China is going to benefit greatly. The US doesn't do much business with China. We're not going to benefit so much. Okay, we're talking about 1.4 billion people here. 17% of the global economy has basically been locked up for 3 years. The average Chinese tourist was spending $250 billion a year prior to COVID, which basically went to zero. I was reading a stat before this interview that there are 14 daily flights between China and Thailand. Pre-COVID, there were 400.
Wow.
So the amount of travel that we're going to see unleashed around the world is going to be tremendous. As I mentioned, a few $100 billion. Pre-COVID, it'll take some time to get back to that 2019 level, but you can be sure it'll eventually get there. The Chinese consumer should be treated no different than Europeans or Americans when we want to spend money. And the Chinese consumer has also been saving a lot of money over the last couple of years because they haven't been spending it. So while they didn't get checks like we did in the US, even though there's been some voucher programs, they've been saving a lot of money. So there is a pool of capital on the part of the Chinese consumer that can be spent on a lot of different things.
If they weren't getting stimulus checks from the government and were forced to basically live at home for a prolonged period of time, how were they able to save? How are they not actually tapping savings during that time?
Yes, for some, it was more difficult. The unemployment rate went up, but factories still had their lights on. And outside of a lot of the disruptions in 2020, China made sure to keep these factories going and keep producing. Again, notwithstanding the disruptions mostly in 2020 and the disruptions we're going to see now until COVID works its way through the population. The services sector, yeah, there's no doubt that it's been hurt, particularly if you're in the restaurant business and local shop business in a mall where 1 week you're open and the next week you're not. But for those that have been working, keep in mind in China, north of 80% of the working people there work for a private company. Everyone assumes that China is just dominated by these state sector companies, and you're not going to ever really see healthy growth again. But it's mostly the private sector that drives the Chinese economy.
Right,
and
like Foxconn is a private company, right?
Foxconn, Alibaba, JD, Tencent, Meituan, Pinduoduo. I mean, there are a lot of them. And yes, many have embarked on job cuts over the last couple of years, as you would think in an economic downturn. But there's still a lot of people working, and they saved a lot of money.
If China does indeed reopen the way that it's planning to, it's going to stimulate material parts of the global economy, maybe not enough in totality to reverse the slowdown in other parts of the economy, but it's going to be a material factor. And certainly from an investing standpoint, if you can position yourself in front of the waves of that unlocking capital in China, there's probably going to be some pretty good investment opportunities there.
There's no question. When you look in Macau, and we own a few of the Macau casino stocks, the traffic went from 100% and fell by 90+% during the lockdowns. It was always on, off, restriction here, reopen there. I mean, the numbers were just awful. This is the Las Vegas of Asia that is now going to reopen in a big way. So, I mean, that's just one example. But if you're a hotel in Paris or one in Tokyo and Bangkok that caters to leisure travel, I'd be pretty psyched for what your spring and summer are going to look like.
Okay. And just to use the Macau casinos as an example, because they're kind of almost like a pure play on tourism from China, how badly did they get hit? Like, are they at bargain basement prices right now, or?
The stocks have had a nice rally here over the last couple of months on the reopening. So they've already had a nice move, but they're still well below where they were in 2019 when, we didn't know what COVID was. So I still believe that there's plenty of upside potential in these stocks, as there are for anything travel related that's going to cater to that region. Again, I mentioned the Thailand, China travel. I mean, I think a third of Tokyo's foreign tourists came from China. That number essentially went to zero as of 3 months ago. And it's not just going to impact travel. It's going to impact oil prices. China's been spending a fraction of what they've been spending pre-COVID on crude oil. So I think that is going to be another major beneficiary of the full reopening, which we'll probably feel in Q2. So while right now oil's gotten off the 70 level, now around 75 in WTI, I think people are going to be surprised at where oil goes, and not just going back to 100, but going to like 125 or higher.
All right. Really interesting. I'm curious, ballpark time frame on that?
I mean, I think it's going to be back half of this year, because as each month goes by and COVID becomes just more of a cold in China, and there's this full reopening likely in the springtime also as they get through the flu season. I think that come spring and into the summer, you're going to see that the Chinese consumer is going to be unleashed on the world.
If indeed the central banks are serious and they've got the backbone to commit to it, we have such a debt-saddled economy right now that this could result in a lot more pain than the markets are currently pricing in.
There are a couple of things. So we know that the Fed got run over by the inflation truck that they didn't see coming, and now they're trying to make up for it. But it's not just raising interest rates to a certain level that is going to sort of, in their eyes, regain their credibility. It's making sure we don't have a repeat of the 70s where inflation went up, it came back down, Fed backed off, it went up, it came back down, the Fed backed off, and then skyrocketed into the late 70s, early 80s. So that's the point of how many more rate hikes they have left. At this point, it's pretty irrelevant. I mean, they're already at 4.25, 4.5. So they go to 5, 5.25 on top of what they've already done in such a short compressed time frame. I think a lot of the impact is already in place.